Did you know that even after the recent 3-for-1 Tesla stock split, investors are already looking forward to the next split? Granted, the stock split allowed more retail investors to buy Tesla shares. Because of that, they are eager for that next split, and if you want to know more about it, you would not want to miss this. When stocks trade in a so-called comfortable range, everyday investors can more easily afford a piece of the company, according to Lindsey Bell, Ally's chief money and markets strategist. That drives more interest in the shares, and more interest means more people trading the stock. Before we go on, Moomoo developed a new function, the industrial chain. Suppose you want to find out the stocks that have the potential to fluctuate in the upcoming days or months. The industrial chain will help you a lot. It provides a detailed picture of the trending industries, such as semiconductors and EVs. You can quickly find stocks either upstream or downstream, which helps you focus on target segments of an industry more quickly. Also, as segments are related to industries, you could predict price fluctuations faster without reading many research reports to determine the relationships within one industry. Link in description. Tesla's 3-for-1 stock split took effect in late August after the company declared the split in early August. Prior to the split, shares ended at $891 and began trading at roughly around $297 per share the morning when the split took effect. Tesla implemented the split by paying a stock dividend of 2 shares for each share held after the close of trading. The stock split makes the shares less expensive and more accessible for a wider base of retail investors. It also makes trading options in the stock less expensive. When Tesla first proposed the stock split, it said the move was primarily intended to help the company offer every employee the option of receiving equity in Tesla, and that increasing employee satisfaction would help to maximize stockholder value. The first time Tesla split its stock in August 2020, shares had gained 81% between the split announcement and the day the stock split. In the month following the split, Tesla shares dropped about 14%, but recovered in less than 2 months and were up about 36% 6 months after the split. Editor-in-chief of Investopedia, Caleb Silver said, "Shares of Tesla are up 28% since it announced its most recent split, but it's still down 16% for the year as investors have realized that it is not immune from a slowdown in spending, especially discretionary spending." A stock split does not necessarily change anything about a company's business fundamentals. It's just simple multiplication and division. Like Tesla's most recent split, the company multiplied each shareholder's holdings by 3, while dividing its stock price by 3. As such, Tesla stock fell from about $900 per share to about $300 per share after the market opened on August 25th. The value of shareholder stakes will remain the same, but stock splits can be an effective way to make buying a stock appear to be a cheaper proposition. That makes retail investors wonder when Tesla is going to have its next stock split. Some wonder whether there is some sort of pattern that Tesla adheres to when it comes to splitting its stock. According to some, in order to predict the next stock split, referring to Tesla's stock split history has to be taken into account. When Tesla first split its stock in August 2020, the stock price was around $1,500 per share. In August 2022, the second time the EV company split its stock, the stock price was around $900 to $1,000 per share. It is important to note that Tesla is not doing stock splits only to make sure that the stocks go higher, but they do it because they know the stock price is going to go higher and to make sure that their employees can buy stocks at a more affordable price. After the split in August, buying Tesla stock is significantly easier than it was before the split when the company's stock price was in the $800 to $900 range. From that, a $300 per share price is a lot more affordable to more people. Although it is still a significant amount of money, it is much easier for retail investors to own a share of the leading EV company compared to when the stock price is around $900. Now, looking at the trend of how Tesla is doing these stock splits, they're slowly coming down on their stock price level. This appears to be a piece of good news since retail investors can expect more stock splits sooner than later. Looking at Tesla's stock split history, it seems that the company is trying its best to perform a stock split before it reaches the 4 digits, in the $1,000 range. This is what we are going to base our prediction on. According to some Tesla stock valuations, Tesla stock in 2024 and 2025 get in between $860 to $1,176. That said, it can be predicted that sometime between 2024 and 2025, Tesla may do a stock split. When the stock split is just about to hit $1,000 per share, Tesla may do its 3rd stock split in the latter part of 2024 or the first part of 2025. How much will it be? Assuming the Tesla stock is worth $860 in 2024, the company may do a 4-to-1 stock split. We come to this conclusion because Tesla seems not likely to go below $100 per share and wants to keep it in the low hundreds, which are in the range of $150 to $200 per share. So, if Tesla will have a 4-to-1 stock split in 2024 when the stock is worth $860, the stock price will be $215.80. If that happens, the stock price in 2025 will be $283, $239 in 2026, $401 in 2027, $450 in 2028, $456 in 2029, and over $500 in 2030. Again, that is if Tesla will split its stock 4-to-1. If that happens, Tesla will probably have another stock split in place in 2030 when the stock price is over $500 per share. It may be a 3-for-1 split this time, much like the most recent split. That said, there are 2 scenarios in which Tesla will split its stock. First is 3-for-1 split, and the other is more than that, perhaps 4-for-1 or more. If they split the stock 3-for-1, the stock price will be around $170 on the premise that the company's stock is around $500 in 2030. It does not seem like Tesla will do more than 3-for-1 at the $500 range, but since this is a prediction, we may as well take it into account. That said, in the conservative case, there will be at least 2 stock splits they could do. Note that it is a bit more conservative because there is Tesla insurance, bot energy, and robotaxis to take into consideration. According to calculations, the average car sale in 2022 was $57,000 per vehicle, predicted to be $55,000 in 2023 and 2024, and keeping at a $50,000 average by 2025 onwards. Go to Moomoo to see exactly how Tesla stock will perform. Link in bio. Assuming that by 2023, Tesla stock is worth $608 per share and $941 by 2024, there will be a stock split between that time. It may be a 5-for-1 stock split in 2024 when the stock is worth $941 per share, which will be around $188 per share after a 5-for-1 split. If that happens, Tesla stock will be $268 in 2025, $402 in 2026, $544 in 2027, and $720 in 2028. Now, when the stock reaches $720 in 2028, there may be another split to bring the price down to $144. That said, these predictions are a product of looking at the conservative case, where we look at the vehicles only and a little bit of FSD to this case, as well as robotaxi insurance and Tesla energy. Also, the presented numbers in terms of profit and sales were really conservative too. Still, with all that, there may be at least 2 stock splits in this decade. While many car companies attempted to deliver relatively affordable products that could be mass-produced and easily marketed, Tesla went in the opposite direction, focusing on creating captivating and luxurious cars that would glorify electrification. Speaking about Tesla's mission in a 2013 company post, Elon Musk wrote, "Our goal when we created Tesla a decade ago was the same as it is today, to accelerate the advent of sustainable transport by bringing compelling mass-market electric cars to market as soon as possible." From there, Tesla solidified its success by reinforcing its business model, focusing on a tripartite approach to selling, serving, and charging its electric vehicles. While other car manufacturers sold through franchised dealerships, Tesla opted to cut out the middleman by selling its vehicles directly to its customers. Over the years, Tesla has created an impressive intentional network of over 400 own brand showrooms and galleries across the globe, which it believes enables faster product development and an improved customer buying experience. Moreover, Tesla's repair process is as streamlined as possible. In some regions, Tesla employees, Tesla Rangers, mobile technicians who can make home calls upon request, though in some cases, the service can even be delivered remotely. The Tesla Model S, for instance, can wirelessly upload data, meaning Tesla Rangers can view and resolve some issues without even seeing the vehicle in person. Also, Tesla has addressed a major concern surrounding electric vehicles on how and where to charge them with the creation of its own network of supercharger stations. These innovative charging stations allow Tesla drivers to charge their vehicles in approximately 30 minutes and completely free of charge. If Tesla continues its path to success, like experts expect, Tesla stock will soar. In light of that, retail investors will no longer be able to afford to buy Tesla shares when it becomes too expensive, which is why most of them anticipate a stock split. Subscribe to this channel to find out more Tesla stock surprises.